I'm sure you've heard the old saying that the market is climbing the wall of worry. There's a lot of truth to that saying because there's always a reason to sell, especially if you watch the financial or political news. Just a suggestion, turn off the TV. I assure you, you will be much better for it because disaster looms around every corner. At least that's what the headlines want you to believe. Well, what about the reasons to buy? There's lots of reasons to buy, but those are a bit more difficult to pinpoint. And that's what Michael Batnick of Ritholtz Wealth Management found when he created his wall of worry that investors have been climbing this past decade. So, let's take a look. So this is the chart that Batnick came up with. Going back to the market bottom of March of 2009, Batnick plotted several of the most notable reasons to sell. The list includes events like British Petroleum's oil spill, a flash crash or two, taper tantrum, the U.S. government shutdown, the sell-off of crude oil, the 2016 election, another U.S. government shutdown, etc., etc., etc. According to Batnick, the hard part wasn't coming up with the list, but rather choosing what to leave off. Notice that the list does not include the level of the CAPE ratio, Occupy Wall Street, record margin debt, and infinite leverage, to name a few. Additionally, we all have our own reasons to sell. In the meantime, the market ran from the bottom in March of 2009 to the current date and has etched a climb of about 495%. So have you gained 495% since 2009? I haven't, that's for sure. However, what I have done is made a tiny profit and minimized my risks along the way. My goal is not necessarily to match or beat the markets, it's to do well and lower the risks. Unfortunately, I have no way of measuring that for you. So my intent is to simply point out the risks the best I can and hope that you all make prudent decisions. So, what are some future risks for you to worry about? How about a global recession, higher interest rates, increased protectionism, massive corporate leverage, auto industry collapse, and the 2020 election? My suggestion is stay tuned as we'll cover all of them in good time. On the flip side, there are also many reasons to buy. According to Batnick, we've seen 1,000 versions of the reason to sell chart, but we haven't seen the opposite. So Batnick took a stab at that and quickly realized why a reason to buy chart doesn't exist. He cited Bill Gates as saying, headlines, in a way, are what mislead you, because bad news is a headline, and gradual improvement is not. Regardless, this is the chart that Batnick came up with. And he wrote, it's impossible to deny that things have dramatically improved since the end of the recession. But the reason why he struggles to fill up the chart is because gradual improvements go unnoticed. Some of those gradual improvements that have helped push the stock market 495% higher include advances in medicine, professional content curation, costs going down for financial products, high-speed Wi-Fi everywhere, etc. And he concluded that you would think that keeping up with the market is as simple as buying an index fund and leaving it alone. Well, it is that simple, but it isn't that easy because bad news smashes your face against an amplifier, while good news just plays quietly in the background. So, one more chart to show you. You may not know that the Fed, the European Central Bank, and the Bank of Japan have injected more than $1.1 trillion into global markets in the past quarter. However, I'm sure you know that the stock market has responded. But according to the Wall Street Journal, in the past 12 months, 40% of all U.S. listed companies were losing money. That's the highest level since the late 1990s, or the period referred to just prior to the dot-com bubble. And then Jay Ritter, a finance professor at the University of Florida, provided this chart here to the Wall Street Journal that shows the percentage of money losing IPOs hit 81% in 2018. That's at about the same level that we saw in the year 2000. And as you can see, the level dropped slightly in 2019. So, ending on this positive note, there was one more brick or stone for that wall of worry. And for today, that's ChewDog Charts. Thank you.